Hi, everyone. I am Abhinav Anand. I'm the Chief Product Officer at Smartnumber, and I'm here to talk to you today about contact center fraud and improving caller experience for genuine customers. I was just thinking a little bit about how I came across TAD Summit and when I first met Alan, and looking back, I found it was in 2012 and still called STB Summit. So it's great to see what a long way this community has come, and I'm excited to be presenting today Smartnumbers insights into the fraud and authentication market and how, from a telco perspective, we all can help. So getting right into who Smartnumbers are. So Smartnumbers has existed for about 25 years. We have about 1,000 customers, and we are a channel-only organization. Our primary channels to market are BT and Nuance. And we are an organization which has never focused on calls and lines businesses. We've usually focused on sort of big business problems. And with that in mind, we always reinvent ourselves every 3 to 5 years, looking at the latest problems being faced in the voice communication space and trying to create a proposition around that. Which brings me to an interesting point around how we came across the fraud and authentication market. So about 4 to 5 years ago, a large number of our banking organizations on a platform were raising operational cases. So they were raising operational cases to trace back fraudulent callers who were calling into their organization and had committed some sort of banking fraud. Our support team were helping them and they were sort of responding to them. But what we quickly realized is there's a better way to help them by giving them a more real-time ability to handle these cases. So we looked at the market, we looked at what's out there in terms of technology to help address these problems. And there were a bunch of other vendors out there, there were a bunch of other tech available out there, but we quickly tested out some of our theories into what we could do with our customers and found that there was a gap in the market. So with that in mind, we launched Smartnumbers Protect in 2017. So about Smartnumbers, we've actually got 3 sets of capabilities and Protect is one of them. The other 2 are Control and Record. I'm going to focus today on Smartnumbers Protect. So diving right into how it works. The way it works is we inject the Smartnumbers platform into the call flow between the caller and the business. So in this case, say if a customer has a contact center and they have SIP or ISDN trunks, what we do is we make sure we get into the call flow for all the inbound calls, which gives us ability to transparently monitor all their call signaling information. So once we have access to the call signaling information, we derive about 200 machine learning features from that. We use the call signaling information along with other databases like Ofcom's numbering database and from other organizations like TUF and CIFAS. And with that, we have about 200 features which sort of help our machine learning model. Along with that, we also derive a full caller behavioral profile, even if they're trying to mask their identity by either withholding or spoofing their number. And we also look at what other customers might have reported for that caller. So we have the concept of a real-time fraud consortium, which is also active. So looking at all these 3 things, the platform assigns a score to the call, and it assigns a reason for that score. And that score is passed on to the customer before the call is answered by either the IVR or by the contact center agent. As part of actioning the call, what the customer does is it consumes that score, and then based on the trust level of the call, the risk score, they might actually make the customer journey faster, treat it as an elevated authentication level call, or they might send it to additional scrutiny because it's a high risk, and that might include sending it to the fraud team or asking a few more questions, security questions by the agent. In terms of sort of the customer challenges that we face, there are 2 pillars to it. Obviously, which is the topic of our presentation today. We have fraud prevention and caller authentication. In the fraud prevention space, there are 3 customer challenges we work with them on. One is telephony fraud. This is where a fraudster calls into a bank and tries to access an account of a genuine customer and tries to make a payment through that account. There's card fraud. Card fraud is generally where you have, say, stolen card details and someone makes a transaction with the stolen card details to buy products, expensive products, usually high value products. And finally, scams, or what's also called authorized push payment fraud here in the UK. Scams are where actually it's not the fraudster pulling money, it's the genuine customer being scammed into making the payment out from their account. So one of the most common form of scams right now in the UK is romance scams, where a vulnerable person might get into an online romantic engagement and might be convinced to pay some money to a scammer. If you look at the other side, on the caller authentication, the 3 main challenges that the customer has is they usually want to increase IVR self-service, which means that they want to do more of the customer transactions within the IVR itself, which has a authentication play into it because they need to verify a lot of the customer details within the IVR. We also want to reduce the average handling time. A number of you will be from the contact center industry, and this is a very common metric used in contact centers, which is how long does the customer stay on a call with an agent. And they want to generally reduce that to reduce the cost of the contact center. And finally, improving the caller experience. So customer experience, NPS scores, those sort of things are top of mind, and both of these lead to that. If we then get into a little bit of a detail of fraud prevention use cases, these are the 6 use cases, primary use cases that we see. The first one is IVR fraud. IVR fraud is where a fraudster is either using automated scripts or actually just manually dialing into the IVR to gather some more data about a customer. So it might be something like getting bank balances, checking date of births, and that can be done through automated scripts by doing a number of retries with the IVR on the same account. A lot of the IVR infrastructure we found is pretty old, and they don't have the capability to protect against such attacks. And the other one is catch and release. So banks generally have good fraud detection platforms for card fraud, and catch and release fraud is where someone's trying to commit, a fraudster is trying to commit card fraud, but it's being caught by that fraud detection system. And the fraudster needs to call in to clear that transaction. So it was caught and then released by the fraudster pretending to be the genuine customer. The third one is one of the things the banks struggle with are cross-channel attacks. So essentially, fraudsters actually come in on multiple contact channels from for the bank. So they might use the web channel, mobile app, and telephony together. They might even try card transactions. Bank generally has visibility on everything but the telephony channel. And what we're doing here and trying to help is with providing telephony data into those fraud detection systems so that they can form a holistic view of the customer or the fraudster, whatever the case might be, on how they're interacting with the bank itself. Anti-spoofing, obviously we are all in the carrier space and understand that we see additional data which might give us an indication whether the call is spoofed or not. So this is around that, whether they can trust the CLI or not, whether the call is spoofed, whether the number is anonymized, and if it's anonymized, actually is it a known fraudster. SIM swap, there are 2 categories here. Generally, it's used by the fraudster to gain control of the number of a genuine customer. And once they gain gain control of the number, they can bypass certain two-factor authentication scenarios. In this case, they might do it in one of two ways. One is they might walk into a mobile operator store and tell the store assistant that they have lost their SIM or dropped it in water or whatever, and ask for a replacement SIM. They would have to convince that they are the person they claim to be they are. But generally, they get around this by social engineering of some sort. On the other hand, what we're seeing is now more common practice is that the fraudster might call into the mobile operator's contact center and try to steal the phone number by actually fraudulently porting it. And that's generally down to, again, weaker contact centers on the mobile operator's part. So, in one way, it's enabled by their weak processes. If you get into cross-bank attacks, this is where the same fraudster actually accesses multiple accounts across multiple banks. And because a lot of the infrastructure that's used to detect fraud is on-premise, it's difficult for the banks to share that intelligence between each other. So one of the challenges they have is sharing that intelligence of a known fraudster across other banks so they can help protect each other. And what we found is banks are really keen to do that as well. All customers are keen to do that, but regulation, technology, and process comes into and blocks it. If you get into the caller authentication use cases, the first one is CLI validation. If a bank has a process where they are using the CLI to authenticate or even identify a customer, they want to be sure that the CLI is genuine and the CLI hasn't been spoofed. So the first use case that we see is making sure that they can trust the CLI and giving them that trust on the CLI. The second one is analyzing the behavior of the caller. So looking at the caller behavior, not just within the bank, but across other banks as well, and other estates they might be calling. And finally, customers want to know with as much confidence as possible that the caller is calling from the number, the device, the location they generally call from. So using signaling information at the carrier level, we can look at a bit more detail about the path the call might have taken, the sequence of the parameters, the switches it might have gone through, and using that, you assign a unique token to the call to provide more of a trust level on the call and more of a certainty that the caller is who they claim to be they are. I thought it would be interesting to share some insights from our customer base. So if we look at what a contact center traffic flow pattern looks like generally, it's a bit of an obvious slide, but there's certain points about this which I'd like to highlight. The first one is that not all contact centers are scanning 100% of their calls. So a lot of contact centers from a fraud perspective, when they use speech-based systems like voice biometric systems, are only analyzing agent answered calls. So when you bring signaling in, what you're doing is you're also examining all the IVR calls. So 100% of the calls can be scanned, but they're not usually being scanned. What we've also seen is generally, there's a very small percentage of calls that are actually high risk or actually fraudster calls. So we have looked at data that's been sent to us around the calls that we have highlighted as high risk and how many of them have been confirmed. And generally, it's under 0.5% of the traffic that could be considered high risk. And very certainly fraudulent traffic is generally 0.2 or 0.1% of the traffic. This is important because if a customer, if an organization is putting controls on their telephony traffic, and controls meaning asking more questions or putting certain hurdles to stop fraudsters, they generally roll it out across all their customers. And when they do that, when they roll it out across all their customers, the 99.8% of the customers who are genuine also get those hurdles. So it really seriously affects their customer experience. And they have an inherent advantage, inherent need to not do that. The last point is a little bit about smart numbers and what we found against when we go into new customers, and if they already have fraud prevention systems within the contact center or in the speech side. What we found is with bringing this new signaling, fraud consortium, and behavioral analysis in there, we are able to find about 50% of net new fraud, which will be previously uncaught by other platforms or systems they have. How would a customer generally operationalize smart numbers? So this is not just true for smart numbers, but generally in the fraud space and authentication space, I think this model works, and this is how a customer would see it. So it's interesting. It's a simplified way of handling, but actually that's how customers need the information and how they want to handle these calls. So generally they're classified into a traffic light type system as red, amber, and green. So you rate every call and you say, is it a green call, an amber call, or a red call? Green calls are calls that can be trusted. Normally what a customer would do on those calls is they'll increase the number of transactions that a customer can do, a caller can do within the IVR for these calls. So for example, if they are just allowing callers to do balance checks, they might allow them to do payments as well. If it's a green call. If it's a red call, they won't. Same they would do with the agents as well. So if the call hits the agent and goes past the IVR and hits the agent can ask less security questions than they would normally do. So if they had a process or a workflow which was to check certain systems and actually ask 3 or 4 security questions, they'll ask a few less and actually reduce the amount of time they have to be on the call and improve the call experience as well. The amber calls are ones where it's slightly in a gray area. We can't clearly say that these can be completely trusted, but at the same time, we don't feel that these are fraudulent. And it's important to keep these amber rather than putting them in the red bucket, because you don't want too many calls to be in the red bucket, because that affects the ability for the team that's handling that red bucket to manage the traffic coming in. So generally what we would suggest is you continue with the standard IDNB process that you have right now for these amber calls, and overall work with us to improve the modeling and giving feedback so that more of these calls can either be moved to the green bucket or the red bucket. If you look at the red bucket, it's one of 2 things that customers would generally do. One is if it's a call which has come in, it can be referred straight to a specific team within the contact center, which would be a fraud team, or special agents, which are more adept at dealing with fraudulent callers. The other option is even if the calls just access IVR and not be into an agent, then you would mark or flag the accounts that have been touched by that call as accounts that might have been compromised and need to be taken care of, whatever the journey might be of the next transaction for that account. So it might be that there's a card transaction later on, or there's a push payment transaction later on. It just tells you that there's a little bit more risk on that account, and future transactions should be, the bank should be more careful on future transactions. Generally, what we've seen within UK contact centers, that's the distribution. You get about 85% of the calls where you can be pretty sure they are who they say they are. But that doesn't mean that a customer would use all 85% of the calls and put them on a speedier path to authentication. They would generally even go, the risk appetite would be lower, and they'll go for the the 0.1 score calls only, the ones where they can be certain that it's genuine, even though we don't think that it would be fraud at 0.2. Then we get about 10 to 15% of the calls who sit in that sort of amber bracket. And finally, you have about 0.2% of the calls which are in the red bracket. And that score goes from 0.5 to 1 right now in our case. And what happens is the accuracy generally increases from left to right. So the higher the score, the less likely it is to be a false positive. So at the top end, we get about 1 in 20 false positives. At the bottom end, it's slightly more, but not a lot more. Now, how the bank deals with this, how many of these calls they want to handle, what score they use to trigger their processes for fraud is up to their risk appetite and the resources that they have. So if they have a team of 10 people, they can handle only so many cases a day, then they would use 0.9 and above. If they have a team of 100 people, then they might use 0.5 and above. The business case for fraud prevention is, from a telecoms perspective, based on three aspects I talked about earlier, which is card fraud, APP fraud, and telephony banking fraud. To show the size of the problem, I just showed here what the UK Finance reported fraud is for 2020. And that's about, well, it's for 2019, but published in 2020. It was about 2 billion. And it's not all fraud is reported. So there's still some within APP, and there's certain banks who don't provide this data. So it's probably much larger than that, but it's still a big bucket of money that's being lost. If you see, the biggest ones that are lost are card fraud and APP fraud. Card fraud and APP fraud, we can help reduce them by about 2 to 8% for APP and 5 to 15% for card fraud. And that's generally because most of this fraud touches the telephony before it reaches card or APP fraud stage. So you have industry stats which would say 60% of all fraud starts within the contact center. But how much of that can actually be detected by the contact center side is obviously debatable. So conservatively, it will be 5% to 15% for card fraud and 2% to 8% for APP fraud. Telephony banking fraud, we can do a lot more, and it's 20 to 50%. If you look at the authentication business cases, they are in two main categories. One is IVR containment, and the other is reducing the time of agent answered calls. The basis of this business case will be the spending per call that a contact center has and reducing the number of calls that are answered by an agent. Generalized industry stats, the spending per call for an agent answered call is somewhere between £4 to £5. And the more of these you can handle within the IVR, you'll save that money. The length you'll reduce for the call, if you reduce it by about 10 seconds, then you save 13 pence for every call. So for a bank doing large volumes, or for any contact center doing large volumes, you can very quickly get to a good number on these use cases. So if I bring it all together in terms of the business case, then you've got fraud prevention about 1.18 million, call authentication about 2.6 million, for a contact center that's doing 12 million calls per annum. So total 3.78 million there saving for them. But you'd find that some contact centers don't care about fraud prevention and mainly care about call authentication. So that part of the business case stands true for them. Some might favor fraud prevention more, but you'd have certain which do both. So the business case could be based on the industry, whether it's a retailer, whether it's a bank, or it's a telco contact center, or a public sector contact center, where there's additional risks that the business case might be based on, for example, data loss, GDPR. In terms of implementation and how Smartnumbers is implemented, we've got two methods of doing it. The first one I showed earlier as well. We call it the carrier model, in which we basically repoint numbers from the inbound or the toll-free platform to Smartnumbers, and then Smartnumbers sends the calls back into the customer's IVR and contact center. And as part of that, we obviously monitor the signaling and then provide the risk score. The risk score is generally injected into their online fraud detection platform or one of the other voice biometric platforms. On the plugin model, it's slightly simpler to implement, but it has certain things that need to be verified with the customer. So in that, we integrate directly with the SVC on the edge of the customer's network or with the IVR that they have. So we get the data from the SVC or the IVR. From the SVC, it would be usually through hairpinning or some sort of a ref or redirect mechanism. And the IVR could be through a VoxML app or through some of the mechanism which might be proprietary with that particular vendor. And then once the data is there, you get the ability to score, and you then can provide the risk score in a very similar mechanism. Generally, depending on the SIP trunk provider, the ISDN provider, the contact center provider, the value we can provide in the plugin model might be a little bit less. It might be somewhere between 70 to 100% of the value we provide in carrier model, but it does allow a simpler and faster implementation cycle for the customer. Finally, to summarize about Smartnumbers, we are a software company and we have a telecoms pedigree, and we use that carrier data, the signaling data, and machine learning technology to help the customers in the fraud and authentication space. From a customer's perspective, we support bringing telephony into the omni-channel strategy for them from a fraud and authentication perspective by making sure that data is readily accessible through an API and the risk is analyzed and provided to them. We also bring certain domain experience knowledge with it, which helps them make sense of the data from an omni-channel perspective. And finally, the implementation, both the carrier model and the plugin model is simple enough in that it doesn't touch or change their voice infrastructure. They can have a legacy voice infrastructure or a modern sort of CCaaS provider, and it would work across both of them. Alan mentioned to me that any Q&A will be on the weblog, so I will end the presentation here. Thank you for listening, and I'm happy to answer any questions. Thank you.